Hi friends. So today I'll cover the topic of important international economic institutions like the IMF, World Bank, WTO, ADB and NDB etc. So understanding of these institutions is crucial especially for aspiring civil servants as these institutions play a very important role in global economic governance, and this topic is also very important from the UPSC exam perspective. So, from facilitating international trade to providing financial assistance and setting up of economic policies, these institutions shape the economic landscape of different countries. Today, I'll cover all of the important aspects of these institutions, that is, their evolution, objectives, significance of each institution, the challenges being faced, and also their role in shaping India's economic growth as well. So, essentially, I'll cover all the important topics which are part of the UPSC exam. So this will be a very important and informative video, especially for those planning to appear for the UPSC or the government exams. I'll try to explain it in a very simple and structured manner. And trust me, you will not find any other video on entire YouTube which is so comprehensive and also concise and structured at the same time. I can assure you that. So please watch this video till the end, and if you find value and need more such videos on structured analysis of different topics, please subscribe to my channel. So without wasting any time, let's get started. So let's first talk about the history, that is the evolution of international economic institutions. So the establishment of international economic institutions is rooted in the historical context of wars, economic crisis, and the need for global economic stability. Now in the early 20th century, we have seen two major world wars, that is World War I during the period 1914 to 1918 and World War II during 1939 to 1945, that had devastated economies, leading to economic crises like the Great Depression, which lasted from 1929 to 1939. And also, very importantly, the realization among world leaders that international cooperation was absolutely necessary to ensure financial stability and economic growth. So, the Bretton Woods Conference, held in 1944, actually marked the beginning of structured global financial cooperation. Now, this conference led to the creation of International Monetary Fund, or the IMF, and also the World Bank. Together, these two institutions are called the Bretton Woods Twins, both of which were aimed at stabilizing the post-war economy and rebuilding war-torn nations. Next, we have the GATT or the GATT, which stands for General Agreement on Tariffs and Trade. This was established in 1947 and it had set the foundation for modern trade agreements, later evolving into the WTO or the World Trade Organization in 1995. Next are the regional economic institutions such as Asian Development Bank or the ADB and New Development Bank or the NDB, formed by the BRICS nations. So these have emerged to be competent global financial institutions as well. Now let's discuss the major international economic institutions, first one being the IMF or the International Monetary Fund. So the IMF was founded in 1944 and it became operational 3 years later, that is in 1947. It has its headquarters in Washington DC, USA. Now, the primary purpose of IMF is to ensure global financial stability, especially after the World War II, by providing short-term financial assistance and economic surveillance as well. So, coming to the key functions, so there are three key functions. First one being the monetary cooperation. So, the IMF monitors economic trends and also advises countries on fiscal and monetary policies. Second is the financial assistance. So countries facing any balance of payment crisis can access IMF loans, often conditional on economic reforms. Third one being capacity building. So IMF helps developing nations strengthen their financial systems. Now you must be wondering, all these functions are fine, but where does IMF get its money from? So IMF gets its money from its member countries, which contribute funds in the form of either cash or gold based on the economic size. So this contribution is called as the quotas. Now the largest contributors as of 2023 are US, China, Japan, Germany and the UK. Now let's come to SDR, which stands for Special Drawing Rights. So SDRs are basically an international reserve asset created by the IMF to supplement member countries' reserves. And this is important, that they are not a currency, neither a claim on the IMF, but can be exchanged for freely usable currencies. So this is very important point also from the UPSC exam, that SDRs are not actually currency and these are also not a claim on the IMF, but they can be exchanged for freely usable currencies which the countries can use for their requirements. So IMF allocates SDRs proportionally to the quotas contributed by each country. So this is important, that the STRs are proportionally distributed according to the quotas or the contributions made by each country. Now, countries can exchange SDRs for currencies, example US dollar or euro, etc., through voluntary trading. So, SDRs are based on a basket of major currencies, that is the US dollar, USD, euro, Chinese yuan, and Japanese yen. Members also earn interest on their SDR contributions. So, this also serves as an investment tool for the member nations. So, why are SDRs important? So, SDRs help countries facing foreign exchange shortages. SDRs act as a liquidity buffer for global financial stability used in IMF transactions and also lending. Now let's discuss gold tranche reserves or the GTR. So GTR refers to the portion of a member country's quota in the IMF that is held in the form of gold. Let's discuss the key features of GTR for a better understanding. So GTRs are part of a country's quota, like we discussed. When a country joins the IMF, it contributes 25% of its quota in gold. A country can withdraw its GTR from the IMF at any time without needing IMF approval or following any strict conditions or the interest rates on the GTR withdrawals being made. So how does it help? This makes it an emergency and liquid fund for countries facing a balance of payment crisis. Now let's discuss credit tranche. So when a country borrows money beyond its gold tranche, it enters the credit tranche, where borrowing comes with IMF conditions. Example, economic refunds. Let me discuss an example of the gold tranche usage and the credit tranche. So suppose India has an IMF quota of $13 billion and 25% of that is about $3.25 billion is in the gold tranche. Now, if India faces a foreign exchange crisis, then it can immediately access this $3.25 billion without any of the IMF conditions. However, if India needs more than this, then it enters the credit tranche, which requires IMF approval and also policy adjustments to be done. So larger economies contribute more and they generally have more voting power in the IMF decisions as well. The IMF can also borrow money from its members if needed. So a two-way transaction of borrowing is allowed between the IMF and its member countries. Now let's discuss India and the IMF. So India became a member of IMF in 1945. It sought IMF assistance during the 1991 balance of payment crisis, leading to economic liberalization. So India had applied for $2.2 billion loan, IMF loan amount, and had to pledge about 67 tons of gold as a collateral. Now the IMF loan came but with certain conditions, leading to major economic reforms under the P.V. Narasimha Rao government with Dr. Manmohan Singh as the finance minister at that time. And what were these reforms? Well, these were liberalization, which means reduced government control over the industries, privatization, which encouraged private and foreign investment, globalization, which opened India's economy to international trade. Also, this had led to devaluation of the rupee. So INR was devaluated by about 18 to 19% to boost the exports. Next is reduction in the import tariffs. So this encouraged competition in India, wherein the foreign companies were allowed to do business in India with lower tariffs. So Indian people or the Indian customers had the choice of either buying Indian goods or international goods at competitive rates due to the lowering of the import tariffs. So these reforms were very significant and immensely helped revive India's economy, making it one of the fastest growing economies in the world. So speaking about India, well, India advocates for greater voting power and also quota reforms to increase its influence within the IMF, because we had seen that higher the contribution, higher is the quota, and therefore it is proportional to the voting power in the IMF. Now let's come to the World Bank. So World Bank was founded in 1944 and it has its headquarters in Washington DC, USA. Its primary purpose is to provide long-term development financing and also to reduce poverty. So WTO has 5 major organizations, being IBRD, which stands for the International Bank for Reconstruction and Development. So this IBRD provides financial aid to middle income countries. Next is the IDA or the International Development Association. So IDA offers concessional loans to low income nations at almost zero interest rates, since it's a not-for-profit organization. Next is the IFC or the International Finance Corporation. So IFC encourages private sector development by providing them loans. Next is MEGA, which stands for Multilateral Investment Guarantee Agency. So MEGA provides guarantee or risk insurance to investors for foreign investments. Next is the ICSID, which stands for International Center for Settlement of Investment Disputes. So the ICSID settles any international investment disputes happening across the world. Now let's discuss India and the World Bank. So India is among the largest recipients of the World Bank loans, focusing on infrastructure, health and education. So India is the member of all the World Bank organization except the ICSID. So this is an important point, that India is member of IBRD, of IDA, IFC, MEGA. However, India is not a member of the ICSID. So key projects which India had undertaken through the help of World Bank loans include rural electrification, smart cities initiative, and also Swachh Bharat mission. Now India supports governance reforms to increase developing nations' influence in decision making. Now let's come to the World Trade Organization, or the WTO. So WTO was founded in 1995. It was evolved from the GATT, or the GATT, which stands for the General Agreement on Tariffs and Trade. So WTO has its headquarters in Geneva, Switzerland. Now let's come to the founding members of WTO, which are Iceland, India, Indonesia, Ireland, and also Italy. So remember, India is a founding member of the WTO. So what's the primary purpose of WTO? So the primary purpose is to regulate international trade, ensure fair trade practices are being followed, and also resolve any disputes. It is not a specialized UN body. So that is another important point which we must note, that it is not a specialized UN body. Now let's come to the concept of MFN, or the most favored nations. So MFN, it's a principle in the WTO and a fundamental rule that ensures non-discriminatory trade practices among the member countries. And how WTO supports the MFN concept, we'll discuss shortly. Now let's understand the key aspects of WTO. First one is the equal treatment. So a WTO member must extend the same trade advantages such as lower tariffs, market access, and reduced trade barriers to all the WTO members that it grants to any other member. Then is the no discrimination. So a country cannot favor one trading partner over another. Any concession given to one country must be given to all. Let's understand it from an example. So if India reduces tariffs on the US steel imports to 5%, then it must offer the same 5% tariff to all the WTO members unless a valid exemption applies. So now coming to the exceptions which are allowed in WTO. First one is the free trade agreements, or the FTAs. So countries can enter into regional trade agreements like the European Union or the USMCA without extending the benefits to all the WTO members. Next exception are for the developing countries. So special preferences can be given under the Generalized System of Preferences, or the GSP, to help developing nations to grow and develop. So WTO considers special and differentiated responsibilities for developed and developing countries. To understand it further, let's understand the special safeguard mechanisms which are meant to protect domestic industries in developing countries. So WTO's purpose is to ensure free and fair trade to all the nations. So if a country imposes tariff on another country, then it's considered as a violation. But WTO provides relaxations to developing countries through special safeguard mechanism. So developing nations can impose tariffs on imported products in order to protect their domestic industries or markets. Now it's important to understand that WTO doesn't declare any country as a developed, developing, or underdeveloped by itself. Countries are free to declare their statuses themselves. So China has always declared itself as a developing country to enjoy the trade relaxations and also the subsidies. Another exception is if there are any national security or health concerns. So a country may impose restrictions for security or health related concerns, if any. Now let's understand another important concept, that is that the shareholding in WTO is not proportional to the voting power. So unlike all other economic institutions, WTO is the only institution where shareholding is not proportional to the voting rights. It has one nation, one vote policy, ensuring world democracy. So if there is an international issue, each country will have exactly one vote to favor their rights. Unlike the case with other institutions, wherein if, example, US, China, or Russia, etc., have invested large sum of money, and therefore they have more shareholding, so they automatically get more voting rights to turn decisions in their favor. So this is one good aspect about WTO, that it ensures the world democracy by not keeping a bias towards the rich countries. Now coming to the key functions of WTO. So WTO ensures to reduce the trade barriers. So the WTO facilitates trade negotiations to eliminate tariffs and also the quotas. Next is settling of trade disputes. WTO provides a mechanism to resolve any trade conflicts between the nations. Next one is the protection of intellectual property rights through the TRIPS agreement. So WTO ensures fair trade in knowledge-based industries as well. Now let's discuss India and the WTO. So India is an active member advocating for developing nations' interests. India opposes unfair subsidies by developed countries and also fights for better market access for Indian products. India's stand on food security and agriculture subsidies has been a major issue in WTO negotiations. Now let's discuss Asian Development Bank or the ADB. So the ADB was founded in 1966, and it is important to note that India is the founding member of the ADB. It has its headquarters in Manila, Philippines. So the primary purpose of ADB is to promote economic growth and cooperation within Asia, and it works on the model of the World Bank. So ADB has 68 members, which are not universal, and the major shareholding is held by Japan having 15.6%, US with 15.6%, China with 6.4%, India with 6.3%, and Australia with 5.8%. So coming to India and the ADB, so India has received ADB funding for infrastructure, urban development, and also for renewable energy projects. Now let's come to BRICS New Development Bank or the NDB. So the NDB was founded in 2014 by the BRICS countries, that is Brazil, Russia, India, China, and South Africa. So coming to its members, so it obviously has BRICS nations as well as Bangladesh, UAE, Egypt, and Uruguay. So this is an important aspect to understand, that it has 4 additional members apart from the BRICS nations. So NDB has its headquarters in Shanghai, China. Now coming to the purpose of NDB, it was meant to finance sustainable development projects in emerging economies. Now this is important to understand that no veto power is given to any member in the NDB. Also, voting is proportional to the shareholding. NDB has an observer status in the UNGA, meaning that a non-member state, international organization, or entity has been granted permission by the UNGA or the United Nations General Assembly to participate in its meeting and discussion, but without the ability to vote on resolutions, essentially allowing them to observe and contribute to the conversation but with limitations. Now let's come to India and the NDB. So India has used NDB funding for transport, irrigation, and renewable energy projects. It is seen as an alternative to the World Bank and IMF, reducing dependency on the Western financial institutions. So this is one good aspect for India in terms of the NDB support. Now let's discuss the challenges being faced by the international economic institutions. So first one is the Western dominance in decision making. Now the IMF and World Bank are often controlled by the US and the EU or the European Union, limiting the influence of the developing nations. Next one is the Structural Adjustment Program or the SAPs. IMF loans require austerity measures that sometimes hurt economic growth. So this is another challenge. Next is the WTO trade disputes. Now the WTO often fails to address the concerns of developing countries regarding, let's say, agricultural subsidies and also patent laws. And also importantly, lack of financial inclusion. So many developing countries still struggle to access the global financial resources, being another major challenge faced by these international economic institutions. Now let's discuss India's role in reforming international economic institutions. So India has been advocating majorly for these 3 points. First is the quota and the voting reforms in the IMF and the World Bank in order to ensure fair representation. Next is having more equitable trade agreements at the WTO that protects farmers and small-scale industries. And then finally, the need for stronger regional cooperation through BRICS and SAARC for economic resilience. Coming to the future of international economic institutions, then the rise of emerging economies like the India and China will demand a more balanced governance structure. Technology and digital finance will help to reshape how these institutions would operate. Next is the climate finance and sustainable development. So this will become key priorities in the global economic policies. So in conclusion, today we have seen that the international economic institutions are essentially the backbone of global financial stability. As future policymakers, understanding their workings will help in shaping India's foreign policy, economic strategies, and also trade negotiations. And so you can expect a few questions, maybe about 2 to 3, in your UPSC exams as well on this topic. So I have tried to explain it in a simple language, but still if you have any doubts, then please feel free to ask your questions in the comment section below, and I will reply to all of your questions. Also, don't forget to like this video and subscribe if you haven't already for more such informative videos. Thank you.